What's up, everyone? All right, well, today is day one of Trader Rehab. The recovery begins. If you tuned into my recap yesterday, you know that yesterday was the worst loss, the worst red day I've had in more than 4 years. I was down over $172,000. Not good, not fun. And so after that loss, I uploaded a recap almost immediately, and I gave you my kind of raw, unfiltered emotions that I was going through, and I walked you through the way I process a big loss. And one of the first things that I do is I put it into context. I step back and try to gain perspective. There's a lot of things I have to be grateful for. Obviously, being down $172,000 was not wonderful, but big picture, life is still good, and I'll be okay, and I'll be able to survive. So gaining context and perspective is really helpful. And then the second is putting together the plan for recovery. Now, I suppose, we all have a choice. I could have said, you know what, this loss is too big to even think about trying to recover from. I'm going to walk away. This is going to be the end of my career. Certainly, there have been people out there who have had losses, not even as big as that, but it was enough for them to say, that's it, I'm done. Now, for me, that really was not an option. It was never an option. And I suppose when you really put that loss into context and into perspective, you realize that relative to my gains, even in the last 90 days, the loss is tolerable. And so then the second question is, okay, if I'm going to get back on the horse, what am I going to do differently? Are there some things that I need to, change in my trading to prevent having another big loss like yesterday? And so the way I thought about it as I did the recap, essentially I said that because yesterday's loss was so large, I had to put myself into some type of modified trader rehab, because the worst thing that could have happened today is that I came in and wanted to make back the whole $172,000 in one trade. And I said to myself, all I need to do is buy 200,000 shares of a stock and get $1 a share, and I'm home free, right? And that would have been a recipe for a $200,000 loss, maybe even more. And then I'd be sitting here giving you guys a second red day recap. And that's when things start to get scary. And then what happens? I come in day 3, I do it again, 3 days in a row. I've seen this happen to traders where in 2 or 3 days, they'll lose $1 million or more. They spiral. Now, I spiraled yesterday. I had one loss, and let's jump onto the whiteboard and kind of break it down for those that maybe missed yesterday's recap. So yesterday, I started the day with a $20,000 loss, and that immediately created an emotion of anger and frustration. So I was feeling really frustrated. What did I do? On my next trade, I boosted my position size, and it was not a very good trade. And then what did I do on the next trade? I boosted my position size yet again. And so what ended up happening was, as I was losing money, I started the day at 0, and as I lost 20,000, then on the next trade, I lost more, and then finally I had this massive snowball loss where I had a huge position, and on that one trade, I lost $165,000, which was, a huge amount, and it put me down $196,000 on the day, which was my low point yesterday. So there's no question that yesterday I spiraled. But what I've seen traders do is day 1, they've had this nice success. Day 1 is minus 172. Day 2 is minus 300. Day 3 is minus 600, right? And then all of a sudden, they're getting a margin call. Potentially they've blown up their account. So what's ended up happening is they have become completely hijacked by their emotions. The emotion of anger and frustration is so powerful. It's so strong. You'll do anything to make that feeling go away. What's the cause of that feeling? The cause is being down $172,000. So the second I'm not down $172,000, that feeling's going to go away. So you get desperation to trade anything moving, anything that stands a chance of giving you that gain. But now you're compromised in your decision-making process. So you've got poor judgment. So you're taking too much risk on the wrong setups, and you end up losing more. So how do we stop that cycle? I think the first part of it, as I said yesterday, is gaining perspective and putting it into context. Now, for me, that was easier to do than it may be for others because my loss represented a relatively small percentage loss of where I'm at on the month and certainly on the year. Well, maybe not the month because it's the beginning of the month, but certainly on the last 30 days and definitely the last 90 days and definitely over the course of the year. And I thought to myself, if I was a fund manager and, my fund was up $6 million on the year, and then in one day it dropped $172,000, I wouldn't think a lot of it. It's not really statistically that significant. And so that also helps gain perspective. Now, again, these numbers are all relative. You could be up $60,000 on the year and then lose 17,000. Or 1,700 in that case. It's 1,700. But nonetheless, you kind of get the idea of, it's all relative. So for me, because I've got this track record, I'm able to look back at that and gain context and perspective. This is why I am such a big advocate of you guys trading in the simulator before you ever put real money on the line, because the simulator becomes your track record. That becomes what you look at to gain perspective. You look at that and you say, wow, you're right. Over the last 6 months, I've been making money. I know what I'm doing. This loss, it sucks. Maybe it was a black swan event. It is what it is. These things happen, but I can recover because look at what I've done in the past. The worst situation is if you don't have any track record at all, because then you don't have any North Star to look at to tell you what does work, in which case you shouldn't be trading with real money. You got to go back to the sim. Okay, so obviously yesterday was bad, but I wanted to prevent at all costs a multi-day spiral. So that meant step one, putting yesterday's loss into context and truly accepting it. Accepting it. This is the idea of radical acceptance. Accepting that this circumstance sucks, but this is my moment right now. This is the moment I'm in, and I can't change it. I can accept it. I can accept the rawness of it. And so I did a great meditation practice yesterday that really helped me come sort of to this state of acceptance. Compassion for myself. Look, love yourself even when you make these mistakes. Accepting and acknowledging the suffering. I'm going to be in a position now where it's going to hurt. It's not a lot of fun. And that's part of the current reality that I'm in. But you don't get to have the good without the bad. This is the yin and the yang of life. And then the third is the commitment. What is my commitment right now? And my commitment is to get back on the horse, to rebuild that account. And then my gratitude for the opportunity to be able to sit down and trade every day, for my parents, for giving me this life, for everything that I have that a lot of people don't have. And so then when I came back after that, I thought with a clear mind and a clear slate about what can I observe about yesterday. And so I thought about that for a few minutes, and I took some notes, and I pulled up my metrics, and we'll go over today's trades, of course. You can now see today's a green day. I'm up $26,000, which is good. Today, it's a little more than 10%, carving off the loss of yesterday. As yesterday, I guess I peaked at a low of minus 196, and then I recovered plus 23,000. And then today I'm up another, 26,000. So that's about $50,000 off the low. So I've recovered about 25% of the loss. As I said, I need to recover half of that loss, which is about 85,000, in order for me, almost 90,000, or close to 100 in any case, in order for me to take some of the guardrails off that I've put in place, and then I can start to rally back through the new highs. So I'm making good progress here. But there were a couple of things that I said to myself. And so I took some notes here, which I'll share with you. So red day minus 172. So the first thing that I said is, I'm okay with tomorrow being red. And I said that to myself a couple times. I'm okay with tomorrow being red. Why was I trying to put that in my mind? I think sometimes after a big red day, you start thinking, yeah, if I just take 100,000 shares and make $2 or $3 a share, I'll make it all back. And you're not even thinking about the possibility that you could be red. So you're not thinking about risk, you're only thinking about reward. You're chasing profit. And I said, I don't want to do that. What I want to do is I'd actually rather assume that there's a greater than 50% chance that tomorrow is going to be a red day. So then I said to myself, how much am I willing to lose tomorrow? And I said, I'm okay with losing $15,000. I said, I'm okay with losing $15,000 tomorrow. So then I said, risk management is my focus. I'm not profit seeking. My total max risk is $15,000. And I said, my biggest goal for tomorrow is to demonstrate for you guys the recovery of a big loss. Not to go big, but to show the reality of slow progress. Now, I also was reminded of something that people have at times said, which is, Ross, after such a big loss, why don't you just take a week off? And I've heard about people who have done this. They take a big loss and they take a month off. And I feel like that doesn't serve a lot of value. Because if you take a day off, you take a week off, you take a month off, it doesn't feel like, for me at least, I feel like part of the process of healing is getting back on the horse. And the longer I stay off the horse, the more fear I have, and the harder it is to get back on, and the more I get kind of rusty and nervous. It almost feels like taking a month off is just almost running away. It's like fight or flight. It's escaping. I don't want to think about it, so I'm just going to not even I'm just going to avoid it. But that's still going to be there. So I'd rather face it head on and just, kind of get it over with. So I said to myself, I need to size down while I work on recovering half of this loss. And I said to myself, I'm eager to get back on the horse. I really am. I'm eager to get back in the saddle. I'm eager to regain confidence. And the best way for me to do that is to focus on stocks that are well within my sweet spot. And so I then pulled up my metrics. And as I pulled up my metrics, I decided just to look year to date. And of course, yesterday's loss set a new record. But as I looked at my year to date, including yesterday's loss, I was really stunned to see that after yesterday's loss, I had eliminated almost all the profit I had on stocks over $20. Look at this. This is the distribution of all my profit from the year based on the price of stock I've traded. And you can see overwhelmingly, the profit is on stocks between 2 and 20, and 5 and 10 is really the sweet spot. So what we can actually do here is we can create an advanced filter to only look at stocks between 20 and just 50, just for the sake of argument. And what you'll see here on these stocks between 20 and 50, which of course my big loss yesterday fell within, is that my profit to loss ratio, $5,700 winners and $8,500 losers. Accuracy is only 62%. This is not sustainable. I mean, sure, did I make a little bit of money? Yeah, but not a lot. So why does that happen? Well, if you look back over the course of the year, I've actually had a couple of really big losses on these higher priced stocks. I'll take bigger positions than I probably should, 30, 40, 50,000 shares. And then suddenly the stock drops $2 or $3 a share and I'm down, $50,000 or $150,000. In fact, I had a trade this year where I bought a stock at around, I think it was like $48 a share, and it went up to 50, 52. It went up to 55, 58. I held the whole thing. I was up over $175,000 on the trade, and all of a sudden it knifed down. And it ended up down $58,000. It was the biggest swing I've ever had inside of one trade. So why is it that some of these stocks are able to drop $10 a share? We look at that trade from yesterday, GLTO, and you look at some of these candles, and the harsh reality is that there are some candles, and I caught obviously 2 of them yesterday. I caught this one right here. This candle right here has a range of a low of $28 and a high of $35 a share. That is an unbelievable range. This candle right here, in 1 minute, has a range of 6 points, $6 a share. This candle right here has a range of $8 a share in less than a minute. And the reality of these candles is that this dropped about $5 a share in less than 20 seconds. and I had 40,000 shares. That's a $200,000 swing. Now, do we see big drops on lower price stocks at times? We do, but I rarely see them in this like type of dollars per share. This is very, very rare. You don't see an $8 stock go to $2 in 20 seconds. It doesn't happen. I've really, I don't think I've ever seen that happen. Now, percentage-wise, that's a factor, dropping 80% in one candle or whatever the case is versus, dropping, maybe 10%. But what I acknowledged was that as we sit right now on the year and we're coming, to Q4, my metrics are supporting, and this is what my metrics look like over the last 90 days. So, a big swing to the red right there. That's not so fun. But I said, what should I focus on moving forward? And I said, well, let's put in that price of 2 to 20, right? That's your sweet spot. I put in that price of 2 to 20. I look at detailed. And this is we're going to go year to date. So it's good all time as well, but we'll focus really year to date. So year to date is 72% accuracy. Okay. Average winners, 3,300. Average losers are only 1,600. My average losers on the 20 and up is $8,500. It's more than 4 times larger. So, and my winners are only about not even 2 times larger. So clearly, if there was an area within my strategy where I should double down in order to increase my profits, is it stocks between 2 and 20 or stocks 20 and up? Without a doubt, it's stocks between 2 and 20. So that reaffirmed my commitment coming in today to focus on this price range. And I said, if a stock is over $20 a share, I'm not saying I won't trade it entirely, but I need to approach it with a bit more caution. So when I sat down this morning, and we're going to start doing, the recap of the trades. The first stock I traded was UPC. So UPC hit the scanners, and this thing ended up putting in a really impressive move. It was a bit lower priced. It is one of these stocks that does not have a catalyst, which makes it a little bit riskier. But we've seen in the last couple sessions that biotech stocks without a catalyst have been making big moves, and this is a biotech stock without a catalyst. So I felt comfortable taking the risk on it. And what ends up happening is it squeezes up right here just before 7 a.m. from $6 to 7 to 8 to 9 to 10 to 11. It dips down right here. And this is where I buy the dip. So we get a first candle that makes a new high, and we squeeze all the way back up to 14. This was a really nice, clean trade. First candle to make a new high, nice entry, nice rally back to the top. Boom, I'm in, I'm out. I make $8,764. I'm on the leaderboard. I'm in the green. Good. All right, so I feel good about that, and now I'm ready for trade number 2. Trade number 2 is ATON. ATON is another stock that's up quite a bit. I'm a little bit, I'm a little bit cautious on it because what you'll notice is that after hours, it made this big move all the way up to a high of $24 a share and then pulled back. But it curls back up, and at about 7:30 in the morning, I decided to go ahead and break the ice on it. We'll look at this on the 10-second chart. So the way I traded this is it popped up right here. So you can see this squeeze. It popped up right here. It then pulled back, and I got in right down here. And just like that, we got this amazing rally from 14 up to 15, 16, and 17. A little on the more expensive side, but still I felt comfortable taking a trade. So on ATON, I ended up locking up $11,689.44. So now I'm up 20 grand on the day. Awesome. That's a great day. So at that point, I'm sitting, I'm being patient, and the next stock that I end up trading is RNAS. RNAS is right at the edge of my price comfort zone. So I ended up buying only 1,000 shares of it. So let's look at this chart. RNAS pops up. We're actually going to do a 10-second chart on this one as well. And it hits a high of about 18 right here, 19. So it pops up right here. It dips down. And I got in right here as it curled back up. And I only bought 1,000 shares. It ends up going from 18.50 to 19 to 20, 21, 22, all the way up to $29 a share. and I made $6,000 on it with only 1,000 shares. So that was a pretty good profit to loss ratio, because what I was ultimately risking was the low of this candle, which was about $2 a share. So that's why I took only 1,000 shares, risking 2,000 and made 6,000. That's a 3-to-1 profit to loss ratio. So that was solid. Then the trade on 4, disregard that. That was just, that was a hotkey. And then MYNZ, I took a trade on this one. It did come out with news, and I was honestly surprised. Stock comes out with news, top line results, and it ends up now being down 14% on the day. This confuses me because it comes out with news that seems good. It goes from, $1.50 all the way up to just under $3.50 and ends up selling off. Meanwhile, we have these stocks like XBIO that have no news whatsoever and are up 200%. So I'm a little bit baffled at why stocks with seemingly good news are performing worse than stocks with no news whatsoever, but that's the market that we're currently in. So as we sit here right now, I'm finishing up day 1 of Trader Rehab. In total, I've recovered about 50% of the loss off of the low, which was minus 196,000 yesterday. So the goal for tomorrow is to continue with Trader Rehab, continue trading with smaller share size, and continue focusing on stocks that fit well within my price range of 2 to 20. That's where I feel the most confident. That's where I'm going to be the most aggressive. My metrics support that. Now, once I've made back half the loss, I've started to build a little bit more of a cushion, I can start venturing out. And I will still trade stocks over 20, but I just need to acknowledge that for some reason, and I could speculate on all those reasons, but, and some I already have, but for a number of reasons, I'm not doing as well on them as I am on the lower price stocks. So time spent looking at a higher price stock and potentially catching an unnecessary loss on it like I did yesterday is time I'm taking away from trading stocks that are within my wheelhouse, that are more affordable, where I could potentially have made a lot more. I think yesterday actually could have been a green day if after that first loss of $20,000, I just left it alone and focused on other stocks. In fact, it would have been, because I did make $23,000 on ULY, which was a lower price stock. So it's actually a fact. Now, had I not taken that first trade when it was at $30 a share to begin with, I wouldn't have started the day going in the red. But this is the reality with those higher price stocks. It is so easy for them to get away from you. So my plan as I continue Trader Rehab is to continue to trade with the guardrails on. Smaller share size, more focused on highest quality setups. And in this current market, the theme is biotech with no news. There's also a little bit of a theme around some higher price names. So I've got to be mindful that that's what's obvious right now, but that may be a little bit outside where I typically perform best. So I have to mitigate my risk by reducing my share size. So tune in tomorrow for day 2 of Trader Rehab. I will have another episode updating you guys on the progress in the small account challenge. I traded in it today. It is another green day. So the account is still growing, but my primary focus right now is on Trader Rehab and regaining some composure in the main account. As always, if you guys enjoy this, I hope you hit a thumbs up. I hope you subscribe to the channel. You can always check out a 2-week trial where you can watch me, work on this recovery process in real time, 2 weeks for $20. And I'll remind you, as always, that trading is risky. My results aren't typical, so please manage your risk and practice in a simulator before putting real money on the line. I'll see you guys bright and early streaming at 7 a.m. tomorrow morning.